You were looking at a chart of the Nasdaq from 2010, and my disclaimer is today that do your own due diligence. Anyway, it's my amusement and my entertainment solely. So why does Marty go through these mundane tasks of looking at past bear markets? No two bear markets are the same. Why would I do that? Because we're dealing with fear and greed, two emotions that are mainstays on the stock market. And so we see in 2000, and believe me, 2009, 2010, things were much bleaker than they are now. I mean, people were getting thrown out of their homes and losing their jobs, and it was pretty rough times. But the Nasdaq did rip through its 200. We had a lot of we had a follow through day here, and then many follow through days afterwards to get to the 200. And then it kind of stalled at the 200, but then traded above it. And you could see it's above the 10, the 21, and the 50. And the 50 actually, curled above. That's the big cross there. Anyway, it doesn't matter. My point is that even though it got into a power trend, it made this sharp pullback here, almost down to the 50 before rallying up and then slicing its 50. Okay. So just keep that in mind that, it pulled back to the 50 several times in 2010. I mean, we know the rest of the history, but it did slice its 50, 5 or 6 times in the course of, this 7 or 8 month period here. So I'm just using this previous bear market and end of a bear market and beginning of a new uptrend just as an exercise to keep your head about you, keep everything in perspective. Today was a bad day, no doubt about it. I'm not going to sugarcoat that. It was the worst day of the year. You can see similarities here in how the Nasdaq kind of stalled here at the 200, kind of went through it now, and it's trading back. The difference is the 50 is still below the 200. But time will tell, and if it takes a trip to 50, which we know it will eventually, just keep things in perspective. And if the market, you got to have a mindset, if the market does this, I'm going to do that. And if the market's going to be in a uptrend, I'm going to get long. If it's going to pull back, I'm going to be more cautious. I mean, that's just the way I play it. I'm not going to look at the S&P or any of the other indexes today. Actually, I lied. I'm going to look at the Russell, because this is the Russell and the Nasdaq are the growth indexes, and this thing slices 21, but it's still above the 50, and you can see the cross here where the 50 is above the 200. So that's a difference between the Russell and the Nasdaq. Anyway, I just keep things in perspective. Yes, it was a bad day, but it wasn't a distribution day, and part of the problem here is your 10-year note, which has been spiking here in the last few weeks. Also, the dollar is strong, so that's going to be a headwind for multinational companies. But darn, I don't want to talk macro. I do not, because I trade stocks. I'm going to take a look at some oil stocks. This is really interesting group for me. Last year was you could just throw a dart and buy any oil stock and make money. This year, the oil stocks are really, out of favor. I mean, there are some sections here. This is a pipeline stock, TRMD, and it's set up, and we had this on our watch list, but it's a little bit extended. I'd be careful there, but it is showing strength. You got to say that in a weak tape like today, a flat day is showing strength. What we don't want to see is something like this, which is a Valaris. This is a driller, and this one just got drilled today with heavy volume. So it's adios, muchachos, when something like that happens. And then some people were saying that Devin was showing relative strength. This is not relative strength, folks. This thing is below. It's got a downtrending 50, a downtrending 21, a downtrending 10. Yeah, it was up, less than 1% today, but it's below its 200. This isn't a downtrend. Stay away. It was up today, yes, in light volume, but that is not relative strength. Not at all. I'm going to go to a couple of stocks that were showing relative strength today, though, and that's Allegra. Actually, I'm going to get to the semiconductors in a minute, but this is relative strength. Yeah, it was down today. It was down 3 point something percent, but it's still, trading down to its 10 EMA. ACLS, and a lot of people wanted to buy this thing, and it's been pulling in a little bit. It had that move from 80 to what 130 or whatever, and that's a 50-point move. So you got to figure it's going to give half of that back, maybe 20, 25 points. So maybe it comes back to the 21 or even the 50 if you get lucky, if you're looking to buy this. But to me, I mean, you just got to kind of say, I missed that train, and we'll catch the next one, and keep your eye on it. And if it pulls back or forms a base, then you can get into that one. But anyway, I just want to show the difference between relative strength and not relative strength. This is not relative strength, and this is relative strength. And NVO is another stock that I'm going to show today. That's relative strength. Anyway, get off my freaking soapbox here. I'm going to go to the retail, because CROX got hammered today. They reported earnings last week, and they guided up to $11.31 for this year. They just started Q1. They're halfway through Q1 of 2023, and I believe they have a pretty good grasp on their numbers. So this is, I don't know, technical trading. It filled the gap here, which is nice. It had a gap from the earnings date where it traded up to like 140 something. So yeah, the gap there was at 125.87. It gapped higher. Wow, up to 143.50, and now just filled that gap today. And if you look at it on the weekly chart, you can just see it's an inside week pulling back to its 10. Oh, this is what I wanted to show you. So if you have an uptrending stock, this thing pulled back to its 10-week line here, which was 111.91. You see that there. 111.91 on the week of February 10th. Now we fast forward 2 weeks later, and that 10-week line is 117.95. So it's like $8 higher, right? seven and a half, $8 higher. So as long as you have an uptrending stock and it stays above that line, if that line's going north, I mean, there's no harm, no foul there. And it all depends on your entry point. If you got it back here, you can afford to sit through some pullbacks. If you chase it up here, then I'm sorry, but that's a loss, and that's why you don't chase performance. This CROX is always going to give you a chance to get in. Anyway, I wanted to look at a couple other retail stocks. ELF. Now, Dillard's reported today, and they said cosmetics was their strongest category in the ELF. This is relative strength as well. When you got something that the Nasdaq's down 2.5% or whatever, and this thing's barely down. And it's still traded down to its 10 EMA. It looks like it bounced, 1.9% today. How about that? But definitely want to keep your eye on. Obviously, this is nowhere near a place to buy, and this is a high valuation stock. I mean, the PE says 54. It's higher than that. It's got a 3.9 billion market cap with 500 million in sales. So be careful with that one. And if you're interested, just wait for a pullback or wait for it to form a base or something. ULTA Beauty is another one. This is a really strong stock. Once again, it was down $5, but it's showing relative strength. It's down less than 1%. Just traded down to its 10, just like ELF. So there's nothing wrong with those stocks. It's just the market weakness. It's going to pull back with the market weakness, like 85% of the stocks do. There's some rare birds out there, but they were hard to find today. Novo Nordisk, this one, with the Wegovy and the Ompizic or whatever, their weight loss drugs. This thing just ripped higher, and it's holding its gains. It pulled back, to its 50, just like CROX did, and then ran higher, but it did not sell back off like CROX did. Well, I guess it did come back to its 21 here, but that's about all you're going to get here. Yeah, back to the 10-week line. Once again, this uptrending red line here, which is your 10-week line, is really a good guide. You can see it goes from 134, up to 138, just continues to climb every week. So a really good stock there. And it's been a really good stock for a long time, as you can see from that weekly chart. Another biotech drug stock that I kind of like. These are high speculative stocks, though. But it's kind of forming this little wedge and support at the 21. So if the market would just behave kind of slightly, I think this thing would do okay. That's a Revance, RVNC, another stock that I like. PLRX. This one gapped up on news, and kind of similar to Revance. It's it's kind of pinching in here, and maybe with a healthy market, and support at the 21, that maybe this thing could pop. But right now, you got to be a little more cautious with the market internals that are showing us weakness, and with the Nasdaq having its worst day of the year. You definitely have to be cautious. I'm going to go back to the semiconductor stocks, and I want to take a look at, well, I showed you these two earlier, these two that I like. And like I said, if you own them at 80, you're fine. You can hold. If not, just you got to be patient if you want in on these things. Don't chase them, because you're going to get burned in this tape. Once again, if you got this thing around 34, 35 on this pullback even lower, you're fine. If you chase this performance, above 40, now you're sweating bullets, right? Or you're just selling and taking profits because you can't afford to let that thing come back and burn you. In semiconductor, yeah, this had a decent report, had a decent response to the report, but now pulled back to its in the buy area around that 77 area, pulled back to the 21 today. And I'm watching this one. Obviously, I'm showing it to you because I'm looking to see if it can get support here at its 21. And there's quite a few of these semis that are looking similar. The semis are looking similar, pullbacks to the 21. Will they find support or not? Well, that's what I'm looking for. If they're going to be supported, fine, I'm interested. If they're going to slice here and revisit the 50, I'm not interested in that. That's just too much weakness, too far to go. I can't tolerate that type of drop. What is it trading now? 41. Yeah. And it's 50s at 36.52. So you're looking at quite a drop there. And a lot of the semis are looking this way. It's 12.5% drop. So no, thank you. TSM is one that I like, a little slower mover, but it's got this big base. Not TSM. Come on, Marty. I'm dyslexic. STM, ST Microelectronics. You can see this symmetrical base, just pulling back here, forming a handle. RS not looking too bad. A little slower mover, has a ton of supply here, 652 million in the float, big market cap. So this is not going to be a high flyer, but definitely a quality looking base, and it's a quality stock. Earnings are not till April 27th, according to Marcus Smith, and it's still above the 21. It's just pulling back with general market weakness. Has a new buy point here at 50.80, according to Market Smith. One more I wanted to show you is GFS. Ouch. This is what you don't want to see. It forms this base on base pattern and has this little handle. That's a nice shakeout in the handle. If it turns out to be a shakeout, great. But if it turns out to be worse than that, you don't want to be holding that. Down 6% today. So that's showing weakness. Anyway, I'm not going to get too deep into this. I'm already over my time limit. We never give up.